move right on, and to keep the market chatter going, let's welcome on board Sunil Subramaniam, the CEO of Sundaram Mutual. Hi, Mr. Subramaniam. Thanks much for coming on board. Just want to get your perspective on the pharma space. We were just looking at the con call bites of Aurobindo Pharma, but while most big guys have disappointed on the earnings front, but we're also at the same time seeing a lot of investor interest which is building up in the pharma space over the last couple of months. Where do you stand as far as the sector is concerned?
For us, the sector as a whole, to take pharma, we split it into three categories. One is the generic pharma drugs, second is the healthcare and the related industries, and third is the product based companies which are there. So, if you look at it from that perspective, we are quite bearish on the generic, because both the political risk, which is quite high in terms of pricing pressure, FDA and all of those kind of pressures. The healthcare industry, however, I think is a booming medical tourism business, domestic oriented. We think that's a reasonable space to play out, and the product one is a very high risk, high reward bet. So, unless we have a very clear view, for example, we have some closed-ended funds which are 5-year closed-ended. In those, we do take those high risk, high reward bets, but in a generic, kind of general diversified fund, it's quite a risky space. So, we are underweight relative to the index in pharma.
Okay. Let's move right on then from pharma. Let's not talk about something that you're underweight, but let's definitely address what you're overweight on. And agriculture and rural space is something that you're betting on. But of course, there are a lot of offshoots of that. There's two-wheelers, there's chemicals and fertilizers, farm equipment, so many subsets. Which is the one subsector that you're bullish on the most?
We think that the rural consumption, the move from the FMCG to the consumer durables, to automobiles, to the high-end entertainment media, we think the change in the demographic pattern along with that is the younger population, along with the rising per capita income, we believe will make the urbanization, that is the rural India is becoming more and more urban, and hence consumer goods like washing machines, televisions, two-wheelers, cars, we believe that the growth rate of these are going to far outpace the broader consumption rate of growth in rural India. This has been aided by 3 consecutive good monsoons and the government spend. So, one of the things in this election year is that in election year, spend in rural India shoots up by political parties, by candidates, and by everything. So, to that extent, for us rural is like for us a kind of a decadal story, because it's not, and if you also see the infrastructure spend of the government, the roads, construction, all of that is also more in terms of rural India. So, I think that the rural India is going to be the focus of both the infrastructure and the consumption cycle. So, we are very, very bullish, and one of the reasons as a fund house we are overweight is because we are probably one of the few fund houses to have a dedicated rural and consumption fund, right, which is upwards of about 2,000 crores in terms of size. So, that means that our calls on the rural sector are something that are well researched and with a 3 to 5 year outlook, and we remain bullish on the broader space there.
Hi Sunil, Nantana from the New Delhi studio. So you're staying so bullish on rural India just ahead of the 2019 general elections, state elections coming up. Crude is on the boil, the fisc is under threat. That means not good news for social welfare schemes, but on the other hand, the government has to stay populist ahead of 2019 general elections.
Yeah, you put it right. Yes, the country risk premium would go up, because in this election year, there will be slight slippages in the deficits, fiscal deficits. Oil price reading through could lead to higher inflation, hence the government could make the oil marketing companies absorb more of that to keep inflation under cool. So, yes, the long term pure economic track record of the government probably is going to be a little bit under challenge this year, but like I said, ultimately all that spent in the economy is going to come through as consumption. So, I think that the one sector which is really going to benefit is consumption with a rural India tilt in the next 12 to 18 months, right, for all those factors that you mentioned. But yes, longer term infrastructure might take a little bit of a backseat in this year, but I think post the elections, I think that should come back on track.
But then that's bad news for your fund, right?
To our fund, absolutely. That's what I was trying to point out. Absolutely.
Before I let you go, my final question to you, and I want to ask you about the oil and gas very volatile times. We've seen, the big trigger being what happens with the global crude oil prices. So, you see big moves on the days the global prices are down. Are funds like yours perhaps reducing their exposure to sectors like this, which will go through these long patches of volatility?
Well, I think about a year ago itself, we took a underweight call on the energy sector, and that continues. So, no need for us to take a fresh underweight position on that. We are already a position on the wrong side in terms of the energy sector, because not only is the oil price pressure there, I think as a power surplus country also for us now, power prices are also going to be headed down. So, there is pressure on that sector from an earnings perspective, and we have been underweight quite some time. And given right through, and we have the winter season coming up, heating season coming up, again demand for oil is going to go up, and there are political pressures. So, I think our short term outlook is to remain underweight on that broader energy sector.
Okay, Mr. Subramaniam, we'll let you go on that note. Thanks a lot for joining us in the studios, as well as giving us your perspective like always on different sectors of the market.